No, something's wrong on my screen here. Hold on.
Good morning.
Now, as y'all can see, there are.
Okay. Well, today we're going to do a problem together, and then we will continue in chapter 2, and then I'll give you guys one to do as homework. It's a similar one. So we'll go ahead and get started. Problem we're going to do is problem with my camera. That's what we're going to do. No. Problem 2-2A. Let me get this. So this is what we're going to do together, and then I'll give you problem 2-2B. And there's an answer sheet for. Check something here. This does not look right. That might be square. So, you know what it is? This is too bright. That's what that is. Okay, so there's a problem out of the textbook. It's let me get a page number if you want to use your own. It is on page. It's on page, I don't know. The ebook, I guess, does not use page numbers. Huh. All right. Well, apologies on that. So apparently the ebook doesn't use page numbers. It's at the back of chapter 2, though, in the A problems. That is so strange. All right. Well, anyway, it's in the back of chapter 2, and so is the focuses. And PR 2-2B, which I'll have you guys do it on your own. That's there also. All right. So what I'm going to do is I'll leave this up, and I think that you can do a split screen if you want. If you want to have this up while we do the other one, or at least you can put this one on the side. And it's a little bit juggling to see 3 things on your screen, but yeah. So I'm going to pull up the. So this is just like we had before. I'm going to move this for a second. So. This is a similar handout to what we had before, except that it doesn't have the transactions in it. So we're going to use the sheet on the side for the transactions. Okay, so this is the problem. These are the accounts they tell us we can use. So it's kind of nice to have a list of accounts. And by the way, a lot of times what we'll have in regular accounting is what they call a chart of accounts. Every company calls things a little bit different. You know, they might call it office salaries expense. They might call it office wages expense or something like that. So, but they'll have a chart of accounts, and then you can kind of pick the accounts you have. So unlike we do in this class, sometimes you don't have to come up with the accounts yourself. There'll be a list of them. Okay, so we're going to go ahead and use. Can you guys read this thing? Oh, is that legible?
Yeah, I can read it.
Okay, good. Okay, so this is so we're going off these transactions here, and I'll be putting it on my screen. Unfortunately, I can't do a split screen on mine, so I'm going to go ahead and just put up the my document, and then I'm going to kind of be pointing over here. Okay. So we'll go ahead and get started on these. And again, you can enter them right in there. They don't give us dates, so you can't put any date in here, but we can put the accounts in and that sort of thing. Okay. So looking at A, we have Jay Crowley transferred cash from a personal bank account. So Jay took it out of his, Jay could be a girl too, or her, personal account to be used for business in exchange for common stock. So the business got $40,000 and they issued the stock to Jay. So opening up a new business. Okay, so what accounts are we going to have?
Would it be cash and common stock?
Yep. Oops, that's not high school stock. And for now, this is somewhat interesting that this is only from the business's point of view. So from the business's point of view, did cash go up or down? So does the business have more cash or less cash now?
More.
More. There we go. And how about common stock? Do they have more owners or less owners?
More.
More. Good. Yeah, right. They had 0 owners before, right? Okay, so going down to our chart, I put those chart things on here at the bottom. Okay, so cash, it's an asset, and it's going to increase with a debit. And may as well jump to the stock while we're at it. So cash is going to be a debit. Common stock is an equity account, and it's going to increase with a credit that you already knew that, because if you know the debit, you know the credit. Okay, so cash is a debit, common stock is a credit. Okay. Again, I don't care if you do debits or credits first. As long as the debit and credit is correct, it's fine. And they don't give us a date, so we can't put that in. Oh, they did give us a date. Wait a minute. I'm lying. It's October 1st. See? October 1st, that's probably 2000, let's say 16. They put a Y in there so they can use the same problem for 50 years. All right, so October 1st, so 10-1- we'll say 2016. And that'll be for all of these, I guess. All right, so there's the first journal entry. Okay, let's go to number 2. Paid rent on office equipment for the month, $4,800. Okay, well, what accounts do we need here? And again, here are the accounts all up here at the top. So we can take a look at these accounts and see what ones we need for B. So paid rent on office equipment for the month. So what accounts do we need?
Are we gonna use cash and supplies expense?
Close. It's going to be an expense.
Rent expense.
Yeah, probably rent. Yeah. Okay, so cash. Let's put that one in first. Is the cash going up or down?
Is it going down?
Down. Okay, and rent expense, right? So rent expense. Oh, that's my trendy small r that I was using for. Okay, and expenses are always going up. For instance, what's more, 1 month's worth of rent or 2 months worth of rent? So they're always going up. And if we go down here, wait, hold on a second. Let me put that in. So going down here to the bottom. Rent expense. It's going to be a debit. Cash is going down. I should probably change the. So let's say that cash is going down. Oops. Okay, so cash is going down. Will be decreased with a credit. Expense will be the debit. They're always debits. And if you come down here to this one, you'll see that expenses are always increasing. As time goes on, more and more expenses come. And same thing with revenues are always increasing. So it isn't that you'll never see the other side, but virtually never. You'll ever see this other side here. You usually don't get, say, you'll get a check back from the phone company or something. If you did, though, it would be over here. But for the most part, 99.99% of them are going to be debits. Okay, so hey, it's still trying to do something here. No. Okay. Those are all the same date. Okay, let's see. The debit was rent. You can put either one first, though. It's fine with me. And expenses. Oops. Expenses are debits. They're always debits. So this is for 4,800. And our cash is going down. Yes, going down. Credit. Okay. Let's go to C. C, purchase supplies on account. So what accounts are we going to use? And here are the accounts up at the top here. So purchase supplies on account.
Would it be supplies expense?
Yep. So supplies expense, and then what's going to be the other side?
Cash?
Yeah, you know, I think I'm missing an account here. I'm sorry, I said that wrong. It won't be supplies expense yet because we haven't used them, but it's going to be just the supplies account. I'll talk about this in a second. But the supplies are going to be an asset because until you know, if you think about it, they still have a value, and we haven't used any of them yet. So these are going to be an asset. Okay, so I'm going to write that in here. So the account we're going to use, the first one's going to be supplies. And what is it when we purchase supplies on account? So we purchase them on account. So we haven't actually paid for them yet. I'll give you a choice. It could be accounts receivable or accounts payable.
Accounts payable.
Yeah, accounts payable. So the supplies are going to be an asset going up. I should ask you guys that. And here's the tricky one. Accounts payable. Is it going up or down? Good.
Down.
Yeah, it's going. It's actually going to go up. It's a. The idea is that we owe more.
Just like you paid with a credit card.
Exactly. That now you owe more money, so your debt is going up. Go back to Yeller. So these are both increasing. And I should have done. Hold on a second. Do I have this? I'll make this just so I keep going down the screen here. I might just go over here and point to this. So supplies are an asset. They're going up, so it'll be the debit. So asset, supplies is an asset, it's going up. Accounts payable is a liability. It's also going up, but it increases with a credit. So the supplies are increasing with a debit. The accounts payable is a liability, and it's increasing also, but it's increasing with a credit. So supplies the debit, accounts payable the credit. Okay. I'm on the wrong page. Okay, so Supplies are going up. $50. Ability, and it's also going up. And this is one that tripped, again, the idea is that we owe people more now. If you're, this liability going up, this is the one that, because you think about a liability, you think it's a negative thing, but this is actually saying that you have more of it. So you have more of a liability. You owe more money now. So, this liability going up is you owe more money. So you owe $2,150 more money. Okay. D, paid creditor on account, 1,100. Okay, so we paid them. So when you pay somebody, what account are you probably looking at? It says paid.
Accounts payable.
It is going to be accounts payable, and the other side will be, what'd you pay them with?
Cat.
Yeah, cash. So, okay, so we paid the accounts payable. We paid it with cash. So let's take cash first. Is the cash going up or down?
Down.
Yeah, good. And accounts payable. Again, the liabilities are tricky. The accounts payable, is it going up or down? Do we owe more or less money?
More.
Actually, we owe less. We're paying off those accounts. So up here, this is where we sort of borrowed the money basically to get the supplies, right? We did an account. Down here, we're paying off that account. So our cash is going to go down, but our accounts payable is also going to go down. And if you think about it, if we pay, how much do we pay? $1,100. If we paid $1,100 of this, we still don't owe $2,150. We owe $2,150 minus whatever, $1,100 is. So we're paying off some of these accounts payable. So those are going to go down. Okay, so cash is going to decrease. Okay, so cash is an asset and it's going to decrease with a credit. Accounts payable, the liability, it's going to decrease with a debit. So in this case, the accounts payable will be the debit and the cash will be the credit. Cash is going down. Accounts payable is also going down. Okay, so I'll put the accounts payable. Again, I don't care which one you do first. So accounts payable, it's a liability. Oops. It's going down. 1,100. And our cash is also going down. So up here, our accounts payable went up. We owed more money. We owed 50. Down here, let me do something here. Down here, if you think about this liability going down, now we owe less money. The liabilities are tricky. They're tricky because we think of them just intuitively as negative, but it's sort of like they're going up when we borrow money. We borrow, and the only way they go down is when we pay them. So now we owe less money, so the liability is actually decreasing. So you can think about how much we still owe. We still owe. Let's see. Oops. We owed $2,150, and we paid $1,100. So we still owe. More confusing. I'm thinking this is going to, oh, this will explain it. And you look at it, oh man. All right, so we still owe what? 1,050, I guess. So again, you can see that it went down what we owe. So this is kind of the accounts payable explanation here. Oops. Lost it completely. So accounts payable, we owed $2,150 up here, paid $1,100. So it went down. We still owe $1,050. We pay that in the future, obviously, but so that's kind of what's happened with this. Why like the liability going down and why it goes down with the debit. And the debits and credits, I mean, they're a little bit wacky, but they do what we want it to do. And actually here, let me show you something about the debits and credits. It actually, I mean, you guys probably aren't thinking this right now, but it's actually kind of a neat system. If you look at these accounts, so if you're wondering how these kind of come about, expenses and assets are what you spend money on, right? If you pay the phone bill, you're spending money, it's an expense. If you buy something, you're spending money, it's an asset, to get equipment or something like that. So this side, the left side is all about what you're spending money on. The right side is all money coming in. How do you get money? Well, you can sell something. You can borrow money, or you can get money from the owners. So this side is all money coming in. This side is all money going out. And because they have to balance, if something goes up over here, let's say it's with a debit, something else, if this is going to balance, you either have it go up on this side and down on the same side, Or if it goes up on this side, something else has to go up. So a debit and a credit, this will make it balance. Or if you subtract from this side, you can start. So it's actually a very ingenious system, and you're probably not thinking that right about now, but it's kind of neat. I mean, and especially if they came up with this, whatever, 400 years ago, and we're still using it. So, okay, let's go to E. Wait, D, we already paid E. Oh, okay, so E is earned sales commissions receiving cash of $18,750. Okay. Well, let's take the easy part. What did we receive? We received cash. Yeah, cash. Thank you. All right, so cash is going up. Let's go up to the top. All right, of all these accounts, so we got the cash. What's the other account we're probably going to use?
Sales commissions?
Yes, and that is going to be a revenue account. So this would be sales commissions, and they will be increasing. This is a revenue account, which I know this is a little bit confusing right now. And I think I'm going to go down to the end of the page on this one. Okay, so cash is going to increase. We know that one. That one's, probably can do that one in your sleep now. But let's go down to we'll go down to the end of the page here. Sales commissions. I should put that in here. I don't have it on my sheet. Note to self to add sales commissions onto that. Anything that's a sale is going to be on there, but sales commission will be here. Yeah. Other ones too, but okay, so that's gonna be a revenue. Anything that's the sales gonna be a revenue. So how about green? Okay, and revenues are always credits. And just for kicks, cash is increasing, so it'll be a stop it. So it'll be a debit. Sometimes word is too helpful. It tries to be too helpful. So cash is going to increase with a debit, and the sales are going to increase with a credit. And you'll see that down here, revenues are always increasing, and that's one way to get money. The site is all about getting money in, so revenues are money coming in. Oops, where am I at? Here we go. Okay. So cash is going to increase. That's oops. Hey, my capital letters. Hey. Where the, okay. So asset going up by 18,750. And basically revenues are anything you whatever you do to make money is going to be the revenue. Sales commissions. That's revenue. And I'm gonna put down here. Revenues are always going to be credits. And sales and revenues are exactly the same thing. All right, let's go to F. Paid automobile expense, including rental charge. I don't know if we need that or not. For a month, $1,580, and miscellaneous expenses for $800. Okay, so we paid two of these. You can break these up into either two different entries or put them all in one entry, either way. Okay, so paid automobile expenses. Okay, so what do we pay with?
Cash.
Yep. So paid with cash, it's going down. We paid them. And let's go up to the top. And we have a couple of expenses here. So what expenses are we going to use?
Automobile expense and miscellaneous expense.
Yep. So automobile expense and miscellaneous expense. Excuse me. Okay, so these two, the automobile expense and the miscellaneous expense, these two are always going to be going up. As time goes on, your expenses will always be increasing. And expenses always go up with debits. Cash is going down with a credit. Okay, so automobile expense was some number, 1580. And by the way, you could either put these both in the same one, or you could actually split them up, and that you could actually have miscellaneous expense. $800. So, oops, I didn't put it in. Hold on. So you can split it up like this so that they're, you know, separated. If you did these both at the same time, and this is probably the way the book wants you to do it, you could also just add these two together. So 1580 and 800 is 23E. You know, you could also just do this. You know, either one's fine. Same thing. Oops. If you're an accounting major, if you're going into accounting, I would encourage you to do them separately. If you're not a accounting major, it doesn't really matter. But and the reason being is when you're looking through the cash account, it's nice to be able to match it up exactly with something else. Whereas if you combine those, you know, you're never going to find a 1580 in a cash account that's combined with something else. Minor problem. Okay. And if you're going into accounting, there's always somebody that asks you, well, where'd this come from? You know, say, oh, I don't know. I got to dig back and see what it was. All right. G, paid office salaries, 3,500. What accounts? What accounts for G?
Cash and office salaries expense.
Yep. And cash is decreasing. And office salary expenses increasing. And I'm going to jump right ahead. We know that expenses are always debits. I don't. Expenses are always debits. So knowing that, I'm going to make my journal entry so we know what the other side is. It can be cash, asset. Going down, we can go ahead and look on our, oops, not a negative. Going down, we could always look on a sheet and see the same thing. We've done cash quite a few times, though I think we're getting fairly familiar with this. When you pay out cash, it's going to be a credit. Cash coming in is a debit. And the big thing here, whenever you run into an expense, it's a debit. No, that's just it. So when you run into an expense, you say yip. Well, you don't want to say yippee because you have to pay it out, but you say yippee if you're an accountant because you know it's a debit. Okay, H. Okay, H is a tricky one, and this is why. Yeah. it goes back to C. Okay, so it says that the cost of supplies used was 1,300. All right, going back to C. These supplies are an asset. So they are, they have a value. So when we buy them, we put them on the books as an asset. When we use them up, these are supplies leaving the place. So it says that we use 1,300 of these supplies. So we no longer have 2,150 of supplies. We use 1,300 of them. Okay. And it's not cash going out the door like a regular expense, but it's supplies going out the door. So here's the super, super tricky part. What accounts are we going to use? And I'll tell you what it's not. There's not going to be any cash in this. We use the supplies up. We didn't write a check for anything. So it's not going to be cash. So what two accounts are we going to use? Okay, I'm going to do my high-pitched voice.
Is it the supplies expense?
Yes, supplies expense, and what else? Supplies expense is correct. So we have the debit. What left the place? Wasn't cash. But what left? What do we have less of now?
Would it be dividends?
No.
No.
If it went to the owners, it would. If the owners were paid in supplies, you do find weird things like that. Back in the day when paper money wasn't worth much, if you were an owner in a whiskey operation, they pay you in whiskey. Not that you wanted the whiskey, but you could trade it for stuff. Okay, the actual supplies are going to go down. We've used up 1,300 of them. So the supplies account. So it's going to be supplies expense and supplies. So let's go down here. Let's take the easy one, the supplies expense. Expenses are always increasing. They're always debits. So we know what the debit is. And then supplies are actually going down. We now have less supplies. We've used up, oops. What did I do? I'm doing something wrong here. There we go. We've used up some of these supplies, so they're decreasing. Okay, let's take the easy one, supplies expense. And I say it's easy because expenses are always I can't fit it in there. I'm gonna put it underneath. I want to put that in. So expenses are debits. So whenever you run into expense, it's a debit. Now supplies. We'll go down here. So supplies it's an asset. And it's going down. It's not cash going down. We're not paying cash out, but the supplies, so cash isn't going out the door, but supplies are going out the door. So these supplies so we have less supplies now. So our supplies, oops. It should not be a. So supplies are an asset going down. We've used up 1,300 of supplies. Again, it's not cash going out the door, it's supplies going out the door. This is what they call an inventory problem. And inventory problems are a little more complex because there's two stages. There's one stage where they're an asset, and then there's another stage when they leave the place. So at first they're an asset, they have a value, but once we use them up, they leave the place. So it's yeah, that's a tricky one. All right, let's see, last one. Oh, paid dividends. Well, we paid them with cash. So we paid them with cash, so cash would go down. And dividends. I think the book lists those as increasing. Stop. When you do that. Okay. Dividends are a tricky one, actually. But anyway, so I'm gonna go down here. Dividends will be a debit. The dividends themselves are increasing. They will eventually decrease the retained earnings. So if you think about it from retained earnings point of view, it decreases it with a debit. But the book will tell you that dividends increase with a debit. It's sort of like having more of the negative. Back up to here. Okay, so dividends are always going to be debits. $1,500. Cash, an asset going down. $1,500. And that's it for that one. Yeah, so dividends are always debits. I put that in here. Yeah, putting this equal in is a little bit funny way of saying it because it isn't like these two are interchangeable, but dividends are always debits. So that's kind of my point. Any question on this? Okay, so here is your job for next time. And I'll put a drop in here. You're going to do problem PR 2-2B. This is with the B problems at the end of the chapter 2. And it doesn't give page numbers. At least not that I can see. Kind of a bold move to put out a book without page numbers, but I guess I don't know. Well, all right. So you got space on here. And by the way, you can also do this by hand. So you don't have to do this on the sheet. But if you want to, you turn them all together. And I'll put put the assignment up for these for both of them.
Professor,
Yeah.
I checked the book and it's on page 100 for our homework.
Okay. Page 100. Now, is that 2-2A or 2-2B?
It's 2-2B.
Okay, so 2-2B on page 100. Thank you.
Yeah.
Will you just post the sheet or no?
I'm sorry?
Will you like post the sheet or?
I can't do that. I can't post what I use in class. I can put up there, but the other one. Now I think you have a trial at least on it. Yeah. So yeah, but they don't. You can't post it's copyrighted material. There's fair use to use it in the classroom, but other than that, I can't post it. The grade should be posted. If you turn them in Blackboard, the grade should be posted unless there's a problem with the grades.
Yeah, mine hasn't posted.
Let me take a look and see what yours is. Okay, I'll take a look at it. I'll email you.
Okay, sounds good.
Yeah. So anyway, so I'll put this in. I'll stop sharing here for a second. I'm gonna stop sharing here. Oh, camera is in the wrong spot. There. Yeah. All right. So let me put in the I don't know what to call this. I think there's confusion in what do and all that because of this, but submit coursework here. Oh, actually, I got to put all of them for chapter 2 in. So I'm going to put chapter 2, the handout part 1, chapter 2, the handout part 2, and then this problem 2-8
2-2.
2-2A and 2-2B. I'm gonna put those together. So I'll put the chapter 2 stuff up momentarily.
Okay.
But yeah, so I didn't want to confuse it with the chapter 1 stuff. And I'll take a look, David, at the
Yeah, because the issue I had was I had tried to submit it in that link, but it was having trouble downloading to a form to fit what it needed to submit for some, because I didn't do the sheet on the computer. I wrote it all by hand.
Sure. Okay. And so like, is there pictures or something?
Yeah. I emailed them to you and I titled them which ones were in what. And
Oh,
you
okay.
could also see at the top of the page, I labeled it each day we're in class because I usually just follow along.
Okay. Yeah. Let me write that down. So let me.
Yeah, when I submitted mine, it said attempted, and then I had to try to submit it, and then it went through, but it said it was late.
It's fine with being late. Yeah. So yeah. Let me take a look. I'll take a look at the. I'll go through the email net, and I will go ahead and email both of you. So Marcus and David, I'll email both of you guys when I figure it out.
Sounds good. Thank you, Professor.
Okay.
Any other questions on that? Okay, and I'll put the drop for the assignments in that. And again, I don't know what to call those. You guys probably don't have any classes that call it this, but submit all coursework here has the stuff to submit. So, I guess I could just call it assignments. I guess maybe a better way of doing it. But anyway, yeah. So that'll be up probably within 15 minutes or so.
All right, sounds good.
All right. Okay, I will talk to you guys.
I had a quick question, Professor.
Sure. What's your question?
It's regarding the book.
Yeah.
It's regarding the book. Give me 1 sec. I think I might have bought the wrong book. I got the financial accounting one, not the managerial, I think. Financial and managerial. I only got the financial accounting. I was wondering.
So if I can make a suggestion to you, what I did that for a class I had taken at Robert Morris, and I emailed the place I had bought the book from online, and they usually can like swap the code out for you. They can usually like remove it from there and then switch it to the other one. That's what they did for me in that class. I don't know if it would be the same.
Oh, so I didn't get the one with the code. I just need the book because I'm not taking it next semester. I just need the.
Oh, okay.
Yeah.
Oh, okay.
But the thing is, I saw that they have the 14th edition. Would the 14th edition be okay to use, or does it have to be the 15th?
You can probably use the 15. The numbers are going to be usually, and this is kind of a irritating thing that they usually do. They usually change the numbers, you know.
Oh, they changed the numbers? Okay.
Yeah. So, but here's the thing: if you turn it in, for instance, with what we're doing, you know, if your problem 2-2B has different numbers, I don't care. You know, that's fine. It should be it should be pretty close to what we're doing.
Okay.
You know, one of the irritating
I'll
things, they just change the numbers on them usually. So you should be fine.
Yeah.
Long story short, you should be fine. And if you're not taking the managerial accounting after this one, you don't need the managerial part.
Oh, okay.
Now, if you
Yeah,
are,
because I have the financial accounting one, but the thing is, like, I could send you like a picture of the problem, how it looks, the ones you tell me.
okay.
So you could just see that they're different. Like, it's just different numbers and different dates. But yeah, I could email you.